So so what's really going on right now is there are huge business disruptions, there is surging unemployment, and interest rates are near 0%. And central banks and governments are doing quote unquote whatever it takes to keep the economy going. And if they do not act quickly, it could cause a really bad global recession, Dave. So what does that mean is if they didn't provide, like America 2.2 trillion stimulus package, this was last week, I believe, and and other governments around the world as well. If that those money wasn't in the financial system to provide liquidity, you would have a lot of the SMEs, right, small medium sized enterprises, and the large companies like the airlines, like just today Air Canada, laying off 16,500 jobs. You're gonna have these companies go bankrupt, and it's gonna get pretty bad. So currently, interest rates is at 0.25, and the Bank of Canada cut interest rates just like central banks all over the world, right? That's one of the levers they pull to to cushion the impact of the current situation. And of course, low interest rates, we all love it because the borrowing cost is much lower, and you're going to see mortgage brokers or investors or buyers trying to refinance or try to get a mortgage, to either be more liquid or to try to get an approval to purchase. So you'll see some activities like that, but the thing you have to think about, Dave, is the bank they don't have much liquidity, right? So as we speak, and we're getting updates daily and weekly, the government is essentially monetary easing, which is printing money to provide that liquidity in the financial systems. So it is, we have to stay up to date. Yes, so if it goes an extreme, and you do have to remember, printing money is never really good because it debases the currency. So it really devalues our purchasing power. And if you look in financial history, Germany went to hyperinflation, Zimbabwe went to hyperinflation, so the paper dollar becomes worth less and it falls to zero eventually. So there would be long-term inflationary consequences for all of these money printing by the governments, but it is needed